Mr. Anuj Gupta, Head of Commodities and Currency at HDFC Securities, now joining us. Mr. Gupta, thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about gold, because it indeed is the hot topic. From $3,500 per ounce in the global market, it has fallen to nearly $3,200 per ounce, which is a fall of about 7 to 8%. Is this expected to fall further, and what levels are you eyeing both in the global as well as in the domestic market, that is on MCX, as far as gold is concerned?
Hi, good afternoon. There are two news. One is that US and China trade war are on cooling side, and apart from that, the second news is that Moody downgraded the US. So both news are impacted on gold. One news, which is the US-China trade war is a little bit negative for the gold prices, but on the another side, Moody's downgraded the gold, which is a positive for the gold prices. And we have seen after the making a high of $3,500 per ounce, and it is currently trading around $30 to $20 per ounce. And last week we saw that it touched the low of $31-20 per ounce. So we saw a very a volatile session in last 15 days. But yes, definitely, as far as concern about the gold prices, we are expecting that gold price maybe is still in the range. But yes, the positive impact on the gold maybe see here. But the US and China trade war, which is on a cooling side, may impact a negative on the gold prices. So for the coming time, we are expecting that gold may be on a lower side, and we are recommending sell on rise in the gold prices. We are expecting that gold may test again $31.50 per ounce in the coming week. And for the strategy side on MCX, as crude oil on a correction mode, we are recommending sell on rise in gold prices. So one can go for sell around 94,000 with the stop loss of 94,700, and we are expecting it may test 91,700.
So you're recommending a sell on rise strategy for gold, and you've given a target of $3,150 per ounce for the next 1 week. But if
Yeah,
you can,
yeah.
extend the time frame further for about 4 to 6 months or for the rest of the year, how much could gold prices fall by from these levels?
See, as the long-term trend of gold is still positive, and we are, very optimistic for the gold prices for next 6 or 7 months, or you can say that till Diwali 2025. So we are expecting the end of this year, or you can say that Diwali year, we are expecting the gold may test again more than 1 lakh levels in the coming time. And on dollar terms, we are expecting it may test again $3,500 to $3,700 per ounce.
Long term, or at least for the rest of the year, your outlook still continues to remain positive, although the moves could be on the lower side, at least in the near term. Let's also shift focus to the oil market then. We've seen a lot of volatility led by growth concerns on account of tariff war, and now with the latest deal between US and China, and also because of the nuclear talks between US and Iran. Help us understand, where do you see oil prices headed, at least in the near term? Will $60 to $70 per barrel be a sound range to work with as far as Brent crude is concerned?
Yes, so see, all the news are on negative mode. Last to last week, we saw that OPEC plus members are ready to increase the production. US stockpiles are also on a increasing mode, and even a nuclear deal is also on a positive side. And now, latestly, the Modi downgraded the US, which will impact on the demand of the crude oil prices. And even China, the data of the China is also expected on a negative note. So we are expecting that all the data is on a coming note, coming on a weaker note, and this will impact again on negatively on the crude oil prices. In this year, if you see crude oil prices corrected by almost 20%, YTD loser. So I think the remaining time is still on a weaker side for the crude oil prices, and we are expecting that crude may correct again.
Expecting crude oil to correct further, and since OPEC Plus is a major driving factor for oil prices, do you expect OPEC Plus to again announce a output hike, which is not on the cards? And if at all that were to happen, how much could oil prices further fall by? Could $50 per barrel be completely ruled out, or is that a possibility?
See, I'm not expecting further, production high in the by the OPEC plus members. But yes, definitely, the economic concerns and the slowdown situation in US and China would impact the crude oil prices. And I'm expecting again, Brent price may trade $58 to $60 per ounce.
Understood. So that's as far as Brent crude is concerned. But since you also spoke about China and the Chinese economy, People's Bank of China last week once again announced a whole host of stimulus measures. This is not the first time that they have done this, but do you think these measures will really move the needle, or perhaps you're not expecting any major changes in demand revival, at least in the Chinese economy?
Yes, a little bit maybe there because Chinese economies are recovering from the the lower side, and after the positive trade talk, we are expecting that the Chinese economy will revive from all the commodity angles. But yes, the supplies are still the biggest concern for the crude oil prices, and after the OPEC members, US stock prices are rising, and still the Moody downgrade the US, that will impact a negative on the crude prices. Chinese may be there, Chinese economy may be recover from the lower levels and the demand may be there. But yes, the overall situation for the crude oil is still not looking so much positive. So I am expecting that there is a no, the bigger chance for the revive. If price revive on a higher side, then there's opportunity for the sell side.
Understood. And as far as industrial metals are concerned, if you had to choose one industrial metal that you are bullish on over a long, medium term, say 3 to 6 odd months, which metal will that be? Especially because of the kind of moves that we have seen. Aluminium, for instance, on a year-to-date basis is down 3%. Zinc, meanwhile, is down 10%. Do you expect revival in prices of zinc and aluminium for the rest of the year?
See, I'm not very optimistic for the zinc prices, but yes, aluminum prices are very looking positive because the industrial demand is there, and if China revive from the lower levels, that definitely we can see good demand in the aluminum prices, and also we are expecting a little bit on a copper side. So for the longer term perspective, one can go for the longer side in the aluminum price because demand is there, and China will revive from the lower level. So I'm very optimistic for the aluminum price.
So your outlook on aluminium continues to remain very positive, but also wanted your thoughts on steel and iron ore. Iron ore prices have now fallen below $100 per ton because of Chinese economic revival that is not taking place as expected. What will your view be on steel and iron ore going forward?
See, as I said that the only Chinese demand is not supportive for the commodity prices. US economy is there, which is not looking so much great, and also the geopolitical tension still in between India and Pakistan, that is also be a concern. So we are not expecting so much strong demand for the other industrial matter like iron ore and steel. We are on a very sideways trend because demand is the main concern for the steel and iron ore. So if there is no the demand, we are not expecting so much increase in the price. So we are not so much optimistic for the steel and iron ore prices. We are expecting a range bound momentum kind of thing, maybe seen in steel and iron ore.
So not very positive on steel and iron ore, that's the word coming in. But aluminium, that's where Mr. Gupta is very bullish for the rest of the year. Mr. Gupta, thank you so much for taking your time out and joining us here on ET Now and discussing on a whole host of issues from steel to iron ore to other industrial metals and the yellow metal. But shifting focus to